Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories that we're tracking at 1:30 p.m. The Nifty and the Sensex are off the session lows, but firmly in the red. Midcaps fare a tad better. Fears of a possible bankruptcy at a big global bank add to worries of an already nervous market.
City gas distributors Eicher and MGL slide as India hikes prices of locally produced gas to a record. Analysts say this could impact volumes, and players like Eicher may have to take price hikes. MGL, meanwhile, is also having to cope with an adverse order.
RVNL builds on gains after positive management commentary following a 400 crore order win from NHAI. The management tells CNBC-TV18 the company has consciously moved towards road infrastructure segment in the last 1 year and reported orders and executions above the target range.
Poonawalla FinCorp surges after its arm gets a AAA rating boost.
Nykaa gets a fillip after the board approves a 5:1 bonus issue. A quick check on the markets. We are exactly at the 17,000 mark on the Nifty, a cut of 0.5% on the benchmark indices, but this has been a volatile session. Early in the morning, we showed some resilience. The market opened with very meager losses, in fact, pretty much on the flat line, but then we had that sell-off, the recovery between 11 to 11:30. But in the last 2 hours, things have been a bit choppy, and right now, all the indices are firmly in the red. The banks continue to underperform. The Nifty banking index is down close to about 1%. Himanshu Gupta of Globe Capital is now joining in for a technical check on the markets. Himanshu, afternoon. What have you made of the day so far? Your key observations and trades that you would recommend?
Hi, good afternoon to you. Well, I think after the weaker global cues, the markets are not doing that bad. And if you see the breadth, I think you have to give it to the market. The broader market is actually looking quite strong. And if you talk about the particular indices, I think it's pharma and IT that's showing a lot of strength in today's session. And that's the reason Nifty is looking relatively better placed than Nifty Bank in today's session. Now, mind it, after a very stellar rally that was seen after on Friday, today's pause is actually being looked as a consolidation as far as charts are concerned. And on Nifty, I think any dip towards 16,920, 16,950 would be a buying opportunity, where one can place a stop loss below 16,850 odd levels. And I think in 1 or 2 days, market might attempt to test that 17,150, 17,200 odd levels again.
Okay, in a case like that, what would your individual technical picks be?
So I'm going with a couple of buy recommendations. The first one is a mid-cap IT stock, L&T Infotech. The charts are looking good, and I think this stock is on the verge of a breakout as far as the short-term charts are concerned. So a long can be initiated around current levels for a target price of 4,600, and a stop loss below 44.40 can be placed in L&T Infotech. The second one is a buy on Bharti Airtel. That stock has given a very strong close on the weekly, monthly and quarterly charts. And I think a strong follow-up can be expected here. So Bharti Airtel is a buy for a target price of 830, 835, and a stop loss below 802 can be placed here as well.
Thank you, Himanshu, for that. Now let's get to our favorite mid-cap mover segment. We've got Vivek joining in to tell us about the mid-caps and small caps that are moving around in trade. Vivek, over to you.
Well, that's right. It's been an extremely volatile trading session, but there are certain themes that are standing out in today's trading session. Clearly, if you're looking at the travel and tours, especially today, look at VIP and Safari Industries, both of these luggage makers, look at them, they're surging in the session. In fact, Safari Industries today is at a fresh 52-week high. Some of the other stocks, in the shipbuilding segment, especially the shipyard space, Mazagon Dock as well as Cochin Shipyard, both of them are surging. And today, if you're actually seeing it, it's on very, very strong volumes. Once again, if you're looking at the travel segment, Chalet Hotels as well as Lemon Tree Hotels today gaining in the session. This is after very strong management commentary that we got from Indian Hotels, in a CNBC TV18 exclusive. One stock that we are looking at, that was on the screen was BSL. This particular stock perched at the upper circuit today, and this is on the back of the fact that the company has given some strong management commentary. Remember, this company is one of the exclusive suppliers as far as IKEA is concerned, perched at the upper end of the trading circuit limit. Moving on, if you're talking about Triveni Turbine, after we highlighted, the entire management restructuring in Triveni Engineering and Triveni Turbine and a little bit of consolidation, today the stock is moving up on very strong volumes. And KRBL, in spite of all of the worries in terms of, the export limits, this particular stock today is gaining, and in fact at a fresh 52-week high. On the other hand, if you're talking about some of the losers in the session, Kaveri Seeds today has slipped significantly, a 52-week low. Dr. Lal PathLabs, continues the weakness seen in the last couple of trading sessions. Apollo Tyre, a surprising loser in today's trading session, and in fact, the auto ancillary space, in FEM Industries, is a laggard. Lastly, if you're talking about TRF Industries, this particular stock too continuously hitting lower circuits on back of an unfavorable merger ratio that you're seeing as far as the entire Tata Steel rejig is concerned.
Some interesting names there, Vivek. Thank you so much for joining us and telling us what's moving around in the broader markets. With that, we'll slip into a short break. Up next, we'll be joined by the management. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, amid a rebound in travel demand, we focus on BLS International. Shikhar Agrawal, who's the Joint Managing Director of the company, joins us to discuss the business outlook, the acquisitions that they've made, and the order pipeline as well. Shikhar, good afternoon. Thanks a lot for joining us. Well, it's a lot is happening as far as travel is concerned. We are seeing higher demand, but we are also seeing increasingly becoming difficult to get visa, especially for US, right? That's what we've been reading in reports. That's what people have been saying. But to the markets that you cater to, tell us what's the demand like? Are you also seeing that, yes, visa processing has become an issue? What is the visa backlog and what is the demand looking like?
Thank you. Morning. So as after pandemic, right now, the volumes have almost reached 70% of pre-pandemic level. In fact, in certain countries like India, in the first quarter, in the months of June, we have seen a growth of 40% compared to 2019 level. Definitely after, COVID, people are eager to travel. There has been an increase in demand globally. Everyone has woken up to this sudden surge in demand. Embassies have limited capacity. For the governments that we are working for, facilitation has been given on timely manner. In fact, we are working for the US government with our partner in countries like Canada, wherein easy availability of appointment is taking place.
But purely from India, for the countries that you provide visa services to, like Spain or Italy, whichever those countries be, could you give us this indication of how much higher are the volumes today versus pre-pandemic in 2019?
Correct. So if you compare Spain, compared to 2019 level in June, we had seen a 40% surge in application count.
This is only for the month of June, or is this the rough run rate for this year?
So see, this year, first quarter numbers that we have declared, I can comment on the June numbers where we have seen a 40% increase in application count. We have started working for the Thai embassies and all, the embassy in New Delhi and all the 3 consulates in Kolkata, Mumbai and Chennai. We are working for the Lebanese and Morocco government also within India. So we have seen a big surge in application count in all our client governments that we are currently working within India for.
Okay. Shikhar, I also wanted to understand, you said that right now you're 70% of pre-COVID volumes, right, in total. So that 30%, which countries does it constitute? Is it purely Russia and China? Are there more countries to which travel has not picked up in the way we've seen for other countries?
See, typically, globally, if you see major travel source countries, Russia and China were conventionally big countries in terms of numbers. China numbers are still negligible. Russia has just come to 15% of pre-pandemic level. So that definitely because of that, that 30% dip is coming only from those countries. Currently, we have seen a surge from countries like UK, India, Morocco, Algeria, all the other countries, UAE, Saudi Arabia. So we have seen a surge in application count from these countries, but because of the closure of certain countries like Russia and China, the application count is still down. If you look at the financial numbers of the company in the first quarter itself, we did a 50% increase in the top line at 272 crores and a 50% increase in profit after tax also at 30 crores. So we have been growing, compared to 2019 level.
So despite a 40% increase in the visa volumes in the June quarter versus June 2019, your volumes are still 70 in ex of China and Russia. On the whole, your volumes are still 70% of what they were.
Correct. Because
what's the contribution of China and Russia pre-COVID?
They were contributing pre-COVID 30 to 40% in the total volumes of any visa industry.
Okay. So this growth that is coming in from, of course, it's not volume-led but pricing-led also, because Russia and China are not contributing. Can you just quantify it for us? What kind of price increases have you seen? And not only in value-added services, generally on an average, what is the price hikes that you've taken?
See, we have seen conventionally compared to pre-COVID level 1.5 times increase in combined with value-added services, and we've got certain service charges increases also. So, per application, we are generating more revenue definitely compared to pre-COVID level. The demand pattern of the customer has changed. They are applying for more mobile biometric services, different kind of services, and we have got certain increases in service charges. So definitely, I think that has led to an increase in revenue and profitability of the company. Our expenses that were reduced in COVID times, we have not increased the expenses to the current capacity. We have learned to work with the reduced expenses. We have just rolled out our new operations for German government in USA. And we are rolling out soon in Mexico. So those revenues will come in. We've also won new contracts with the Karnataka government, West Bengal government. We've also done an acquisition for the company named of Zero Mass. So we are actually doing a lot of steps to growth for the company.
What's the rough monthly contribution of Zero Mass Private Limited, the company that you recently acquired?
So the revenue of the company is around 180 to 200 crores, and EBITDA is around 25 to 28 crores. Still, those numbers have not come into our books, so those will definitely be added, going forward from the second quarter.
So can you just give us a sense of how quarter two has been? You do have a cash in your books of around 350 crore rupees. What do you plan to do with it? Any more geographies, any more tie-ups that you're looking at?
See, as you know, we have announced this phenomenal acquisition of Zero Mass, with which we have become a 15% market, shareholder in SBI BC business across India. We have become the largest BC, which is, very good acquisition, wherein we've done effective utilization of cash. This will also lead to reducing expenses of our existing business, increase in profit. Similar kind of acquisitions we are looking at, global level, be it in visa business or similar lines of business. Also, as you know, we have applied for opportunity of $1.5 to $2 billion worth of tenders, in which we will require a certain amount of cash to be deployed. And we have declared dividend, to our shareholders, increasing dividend every year. And also this quarter itself, comparing, if you see the first quarter results, definitely you can see that there will be a definite growth in this quarter also compared to last year.
Any guidance for the full year, Shikhar, on revenues and margins?
Definitely there will be a growth compared to last year. If you account for an increase in revenue from our acquisition itself, Zero Mass, there will be a growth. But having said that, in the current existing business, we, as I've told you, that we have seen a growth per application of 1.4 to 1.5 times. So definitely, as the countries open up, if the volume increases, there will be definitely a further growth. And as in when we are deploying our existing contracts that we won in the recent years of German government, Portugal government, Italy government, those numbers and revenues should start showing in this year. So definitely there will be a growth.
Any number on the top line?
See, there is no number, but definitely I think we are going to give a growth in double digits, definitely.
Okay, double-digit growth, demand looking good, but volumes at 70%, but that has been taken care by price hikes. Shikhar, thanks a lot for joining us and speaking with us what the demand scenario is like and what the pricing situation is as well. That's the word coming in from BLS International. With that, we'll do one thing. We'll slip into a short break now. The stock is up around 0.3%. But before we do that, here's some great news for investors. You can now track US market actions real time on Money Control. Log on to Money Control website or app and stay informed about all that matters in global markets.
Welcome back. In our segment, Midcap Spotlight, Abhishek is joining in and he's going to be focusing on CSB Bank. Abhishek, over to you.
Well, Rima, to focus on CSB Bank is on account of the business update that they have given, wherein the momentum is pretty strong on the loan growth. So let's start with deposit. It grew by 10% YOY and about 3.6% sequentially. The CASA or the low-cost deposit, that's grown by 32% YOY and about 1% sequentially. The CASA ratio has improved YOY but declined on a sequential basis. However, no taking away from the fact that the loan growth is pretty robust at about 23.6% YOY and about 8% sequentially. In that, the gold loan portfolio has performed really well, growing by 47.5% YOY and about 13.1% sequentially. Remember that, gold portfolio or gold loans are a high yielding product, so that can boost or, help in maintaining net interest margin at healthy levels. So gold loan share has increased to 45.5%. That compares to about 28% YOY and about 43.5% sequentially. Even of gold loan, the loan portfolio has grown strong on a sequential basis by about 4.2%. Back to you.
Okay, that is the update on CSB Bank, up 5.5% in a weak market actually. But the other space that is doing really well is pharma stocks. They have been gaining in an otherwise weak market over the past few sessions. Ekta is joining us to tell us what is leading to this defensive buy today. Ekta.
Thanks for that. Well, yes, pharma stocks have been seeing some amount of buying in the past couple of trading sessions. And one of the reasons is obviously because of defensive buying. But other than that, it seems as though there is some incremental positivity when it comes to the fundamentals, when it comes to pharmaceutical stocks. So, for example, US price pressure is expected to reduce for a lot of these pharmaceutical companies, probably to 5 to 8% versus 10 to 15 odd percent. Also, when it comes to the Indian pharma market, there seems to be a lot of bullishness in the Indian pharma market growth, simply because there is one big headwind which is now behind us, which is basically the NLEM, which is the National List of Essential Medicines, which was announced for 2022. Also, the Indian pharma market is estimated to grow around 11 to 12% in the next 3 to 4 years. Now, in terms of a couple of individual opportunities, the street is also watching what could come out of Revlimid generic, which is the blockbuster cancer drug. Analysts estimate that DRL can make up to around $500 million to $600 million from the opportunity in the next 3 years. Zydus and Cipla together could make up to around $300 million. Revlimid generic, remember, is a blockbuster cancer drug, $8.5 billion in terms of sales before there was generic pharma that entered into the market. Now, specifically on Cipla, remember Cipla is at a record high. There is optimism from Revlimid generic, Advair generic, which the street would be watching out for. There was a recent inspection of the Indore plant from where Advair generic, which is the inhalation drug, is filed. Also, the company has guided for 2 to 3 complex generics per year. Lastly, in terms of risks, US FDA inspections picking up, adverse outcomes from US FDA inspections. For example, Biocon, Cipla, Glenmark would be a couple of examples that come to mind in terms of recent inspections. And other risks continue, such as price pressure, challenges in the launch pipeline, and fear on cap on trade margins for the India market, as well as discounts. In terms of valuations, yes, a lot of the stocks have run up in the recent days, but if you compare them to their 52-week highs, there are just a couple, such as Cipla and Sun Pharma, which have been quite resilient as compared to the rest.
Okay, all right, Ekta, thank you so much. So that's what happening with the pharma space, but the oil and gas space is also in focus today. And MGL, apart from being impacted by the hike in domestic gas prices that we have seen today, they have also received a negative order from the PNGRB. So PNGRB has ordered MGL to pay the pipeline tariff for the Uran-Trombay line as per the approved rate from 1st of Jan 2014. So it is a period over a couple of years for which they have to pay this tariff. This is to be cleared in 2 months according to the PNGRB, after which they will have to pay interest on this amount. Demand was disputed multiple times at various forums by the company, but finally PNGRB has come out with an order that they have to pay this amount. As per company's notes to accounts, the total amount comes out around 330 crore rupees. They have been showing it as a contingent liability in their notes. There is no specific number that is given in the order, but The idea is that this is the amount that they will have to pay. This implies a 33 rupees per share impact, and analysts say that the EPS impact could be anywhere between 1.5 to 2 rupees per share. However, remember, it is a one-time expense and it is not a recurring expense for the company. Company sources are suggesting that they will contest the order in higher courts, but seems like, yes, this time they will have to pay this amount, but remains to be seen which way things go. For now, it is a negative order for MGL, Rima.
Okay, that's MGL currently down close to about 3.5%. By the way, the sell-off has accelerated a bit for our markets. So we were at that 17,000 mark when we began the show. But in the last 30 minutes, things have taken a turn for the worse. We've lost another 50 points at 16,957, below the 200-day moving average as well on the Nifty. In terms of stocks where we've seen a bit of a collapse, keep your eye on Adani Enterprises. It's a sharp 7% fall on Adani Enterprises in the last few minutes. And it's fallen on very large volumes as well, so watch out for that. Auto stocks continue to be under pressure despite broadly the numbers looking up. So even something like an Eicher Motors, where we've seen record sales, I think 145% higher on a year-on-year basis in terms of Royal Enfield sales. Eicher Motors is down close to about 5%. Clearly, the markets are worried. Profits are being taken wherever there is money to be made. So Eicher Motors is down close to about 5%. Maruti is another big loser today. That's dragging the markets by about 3.5%. So in a bit of an iffy place for our markets right now. Midcaps too have started selling off, with the Midcap index down 0.5%. We're going to take your leave on Midcap Radar from the entire team. Thank you for watching. Stay tuned. Money is... Sorry.
It's your stocks.
It's your stocks, which is up next.
Okay.